Going on to Work Together 6-3, we're going to go to our online book, Lesson 6-3, End of Lesson Review, open up our 6-3 working papers, and click together, Work Together 6-3. Okay, the first part of this is we're going to extend the balances. It says on April 30th of the current year, Fix It Now has completed the trial balance columns and adjustments column of the worksheet. Extend the up-to-date balances to the balance sheet or income statement columns. Remember, with our balance sheet, it is our assets, our liabilities, and our owner's equity, whereas our income statement is revenue and expenses. So let's just take a look at this. We'll go from top to bottom. We're going to extend our balances. Cash is an asset, so therefore it goes in our balance sheet, and we will transfer that amount, $4,900. It is a debit in our trial balance. It'll be a debit in our balance sheet. Next, petty cash is an asset, so it goes in our balance sheet. It has a debit balance of $7,500, so we'll transfer it as a debit to our balance sheet of $75. Our next one, accounts receivable, is also an asset. And you can see if you follow the line across, it has just one number. So we will transfer that as a debit balance to our balance sheet, $1,387. Supplies, next. It has a debit balance of $228, and it has a credit of $153. Since they are opposite, you must subtract them. 228 minus 153. The new balance is $75. Debit is bigger than the credit, so it is a debit of $75. So we will plug in $75 there. Going on to prepaid insurance. It has a debit over here of $75. I think I said 75, but it's $375. It has a credit in the adjustments column of $125. Again, since they are opposite, we must subtract, and we come up with $250. Debit is larger than the credit, so it has to be a debit of $250. Okay, moving on to accounts payable. It has a credit in our trial balance. There's no other adjustments to that because we don't adjust our accounts payable. So we'll transfer that as a $267 credit. Our capital is also in our balance sheet because remember, balance sheet deals with assets, liabilities, and owner's equity. Okay, and so therefore, we will transfer it as $7,443. Our drawing account is also owner's equity, and so we will transfer that. It has a debit balance. We will transfer that as a debit. So now we have transferred all of our assets, liabilities, and owner's equity. Next, we're going to transfer our revenue and expenses. Revenue and expenses go into our income statement. So if you look at this one, sales is revenue. Income summary has no balance, so we're going to just skip over that one. Our sales is a revenue account. It goes into our income statement column. It has a trial balance credit balance, so therefore we transfer that $2160 as a credit. Advertising expense is also an expense that goes into our income statement, so we'll transfer that as $460. Cash short and over is an expense, so we'll transfer that as a debit. Whoops, wrong number. Our insurance expense, you can see insurance has a trial balance 0 it has an adjustment of a 125 debit. So the balance, you would add those two together and you have a $125 debit balance. And you will transfer that into your income statement as 125. Your miscellaneous, 189. Supply expense, you have a trial balance of 0. You have adjustment of 153. I should put equal signs there. Okay, 0 plus 153 is a 153 debit. So we will go in here and put 153 as a debit. And utilities has a $550 balance. Okay, so we have all of our adjustments there. Next, what we're going to do is we will add up the columns. So we're going to add up all of our income statement debit. So I would go through and add up all those numbers, and I would come up with $1,483. I would add up my income statement credit. There is only one total there, so it's an easy add. $2,160. Then I would go through and I would add up those numbers right there, and I come up with $8,387. And I will add up my balance sheet credit columns, which would be those two numbers, and I come up with $7,710. You will notice that these do not balance out. We are normally, when we do this, we normally have something balance out. Okay, and we don't have this yet because we still have one more step of our worksheet. Okay, so this will conclude the first part of your work together. And yep, we got it all correct. It should look like this. So we're going to go on to our next step. We're going to calculate the net income or net loss. Before I do that, I'm just going to erase my mess over here so that I have a place to work here. Make this just a little bit smaller. Okay. So our next step says to calculate and record the net income or net loss. Label the amount in the account title, the total, or then total the income statement and balance sheet. So there's a number of steps that go along with this. Before you figure out your net income or net loss, you have to take a look at your revenue and your expenses. So what you do is you take your total expenses minus your total revenue. Okay, if this happens, if our total expenses is greater than our total revenue, we have a net loss. Okay, again, we have more expenses than our revenue. If we have total revenue that is greater than our total expenses, we've made some money. Our revenue is greater than our expenses. So then we will have a net income. If you look at our problem to the left, you can see that our total revenue, which is our sales, you can see our sales or our income statement credit column, 2160, is greater than our total expenses, which is our income statement debit column. So therefore, it's a good indication that we will have a net income. Okay, so to figure out our net income, we take our total revenue of $2,160 minus our expenses, which is our income statement debit column, and we come up with $1,483. And we will be figuring out our net income or our net loss. Okay, once we subtract our numbers, we're going to take $2,160 minus $1,483, and we come up with $677. That is the difference between our revenue and our expenses. We're going to take this amount here, which is our net income, and we are going to place it in the smaller of the two columns in your income statement. You will notice that the debit column is smaller than the credit. So we will place that number $677, which represents our net income, into our income statement debit column. We're going to do the same thing with our balance sheet. We're going to find the smaller of the two columns, which is our credit column, and we're going to put that same exact number. You cannot change numbers just to make your worksheet balance out. It has to be the same exact number, which represents our net income. Okay, you'll also notice in here when you entered it, your debits equal your credits on that line. Then we're going to add up and we're going to total our columns. So if we take $1,483 plus $677, we come up with $2,160. This column here, we take $2,160 plus 0, we come up with $2,160. This column here, we take $8,387 plus 0, and we come up with $8,387. And the last column, we take $7,710 plus $677, and we come up with $8,387. When you look at your worksheet, when you're all done, your debits must equal your credits in your income statement, and your debits must equal your credits in your balance sheet. And there it is, all completed.